Oil prices increased $1,000 today and over $2,500 in the past week alone. If you guys had any upside risk trade, you are in deep trouble. I'm going to be showing you how I trade broken wing butterflies with live examples in this crazy environment. By the end of this video, you will be able to use this powerful strategy that has no upside risk, controlled max loss, and still collect daily income. Today I want to be talking about one of my favorite trades, which is broken wing butterflies to collect theta. I think this is a very good trade because it's a risk defined trade, and I would like to show you guys how I'm going to put one on for crude oil right now, especially with the Iran war going on and the crazy pump in price with crude oil. I don't want any risk to the upside, so this is a very nice trade for it. I actually already put one on a few days ago on Tuesday on the first pump. Not on the first day, but on the second day of the pump. It went all the way up to 77, and I put one on for the 75 strike broken wing butterfly. And today it pumped more, so I want to scale in and add a little bit more to participate in this and also collect some theta on the way. All right, so let's look at what kind of strike I can do. Everyone has a different style of technical analysis. My lesson here is not about technical analysis, so I'm going to let you guys decide what strike you guys want. For the sake of example, I'm not going to open a position all the way up here at the money in case it reverts. So I'm going to be putting it maybe around here, okay? Not saying this is the best strike. I just want to show you an example. So let's open Tasty Trade over here. Now, there's no right way to trade, okay? Everyone has their own technical analysis. But there is a wrong way to trade. The wrong way is basically you trade too big. You put on too many butterflies. So make sure you follow the rule of 2% max loss per trade and respect that, okay? Other than that, let's continue. All right. Let me show you an example of how to open this trade. First thing is we want to be opening these broken wing butterflies around, I would say 10 to 14 days. Okay, let's look at the 14-day. This is weekly, so the option interest might not be that good. So I'm gonna be opening on the put side, and you can see like it's like zero, a lot of zeros in the option interest. So I don't like that. Let's look for another one. Let's try this 11-day one. Okay, this is all zero, so that's not good. I'm not sure why that one's all zero. Okay, this one looks a bit better. Let's do this one. What strike did we say? Okay, our example will be revolving around the 82 strike. So I'm gonna find 82, sell a put on that. The bottom side will be 2 wick apart, buy that, and also the top side will be 1 wick apart. We gotta make sure the middle part has two short puts, okay, like that. Now let's click all of them. Let's look at the P&L curve and the option charts. By the way, let's go back. I want to also talk about moving and choosing strikes. So I chose 82, that was arbitrary. You can move them around and play around depending on your risk tolerance. So right now we're at 88.5. You can say, hey, I want to move this to 88.5. I think it will go up from here. So if I move it all the way to 88.5, you can see the credit that we're going to receive is 53. That's almost 20 cents more than what we were getting with 82. Okay, so you guys can play around with that. If you feel okay, that's a bit too dangerous, you can go down a little bit. You can see as we go down, the safer the trade, okay, the less credit we get. Okay, if you want to be very safe, you're scared that it will crash down hard, you move it down to 79, 77.5, and you can see the credits going down. Okay, so you guys decide what kind of middle strike you want. Now you can see when we open it, we're gonna get about 36 cents, so 360 bucks. You can see if crude oil keeps going up, if we keep going up, there's actually no loss. So no matter, like if it blasts to $100 to $200, $300, doesn't matter. It will always be, you can only make the max gain, which is $350. So that's nice. Now on the bottom side, if it crashes below around 80.5, the max loss you can lose is 650. So I really like that because I want to collect theta, and at the same time I don't want to be opening any naked positions right now because the margin usage is quite high. I think IBKR and Tasty, they increased the margin requirements for oil because it's so crazy right now. This is a great way to collect theta without opening naked positions. Now let's look at the max gain. The max gain right here at the tip, at the middle of our strike, 82, you will make $1,370, almost 1,400. That's in theory, and also only when it expires at 0 days to expiry. Okay, let me tell you, that's theory. Don't listen to any website out there that talks about max profit. Look at this number right here, max profit 1,350. It will never happen because that has to happen. It has to land exactly at 82 when the market closes. Okay, and honestly, if it's way too dangerous because you don't want to have any oil expiring in the money, especially your short puts, because these are physically delivered instruments. Okay, let me repeat, it will never happen. Don't listen to any resources out there about theoretical max gain. It will not happen. So don't set your profit target to try to get 1400. Okay, a realistic approach to this on how much profit to take is, I would say, at most 25% of this max gain. So max gain is $1 here, okay, because it's one whiff. 83 minus 82 is 1, and each dollar on the CL is $1,000. So a more realistic profit target would be 25 cents, okay, only a quarter of this. And let me show you why. Once I show you this analysis tab, you'll understand it more. I want you guys to focus on this orange line, this P&L line, as I decrease the days to expiry. You will see it levitating up. See, at 1 day to expiry, look at this. Even at 82, you're actually making almost no money. The theoretical gain right here is $50. Okay, that's it. It's nowhere near 1,400. Now, on the last day, this is the last day. Even according to Tasty Trade, on the last day, if it's exactly at 82, you're only gonna make $425. It's shocking, right? So this green triangle is pretty much useless. That's theory. We have to look at the more realistic, the P&L theoretical line, which is the orange line. And even that, it says it's nowhere, it's not even half of this triangle. That's why I was saying a more realistic profit target is 25% of the max theoretical gain. Okay, so if you look at over here, I'm sorry, this is covering it. I can't move it in Tasty Trade, but if you look, actually at 83, the P&L Theo is about $500. So that's what I was talking about. We want to set a limit for 25% on max gain, which is positive 25 cents. Okay, so you collected 370, and you're gonna set a limit order for positive 25 cents to exit. Okay, and in practice, I've been training this so many years. In practice, even at 100% gain, so just take the $360. That's also great. Okay, but you can go for a little bit more. This trade is mostly about the theta, so we're collecting about $11 a day. Okay, now how do we size this? Let's pretend our account is 100,000. Let me pull up my calculator. Okay, so 100,000, you're gonna risk max 2% per trade. So 2% of that is $2,000. If we move this over here, our max loss per trade over here, it says it's about $630. $630. So you're gonna open 3 broken wing butterflies. Okay, so quantity 3. See, now your max loss for this trade is about 2,000 bucks. And if it explodes, continue to explode. Right now it's at almost 90 bucks. Okay, if it continues to explode, you will not lose any money. You'll make 1,000 bucks. Okay, so that's the trade. It's a very nice trade because there's no risk to upside. It's very useful for this specific scenario right now where oil is pumping due to a war. It is also very nice because you don't need to use margin. This is a risk defined trade. The max loss is 2,000. So IBKR or Tasty Trade will only cap it at, see, buying power efficient. Buying power will only cost you about 2K. And you're collecting 36 data, 36 bucks a day for this. Okay. So in conclusion, let me repeat. Do not look at this and think you're gonna make right here with 3 contracts. You're not gonna make 4,000 on expiry. That's not gonna happen. A more realistic target would be this side. If you look at it's about 1.1K. You can go for a little bit more. You can see if it lands about 83, the top of the curve, it's about 1,500 bucks. Aim for about just 100% gain. So something over here. So look at this. On expiry, right now we're at 88.5. On expiry, if we're still here, we're gonna make the full amount, which is about 1,100 bucks. And I'm very happy with that. This is a very quick trade. 11 days only. All right, that's it. If you guys have any questions, post them in the comments and I'll answer them. Trade small, trade safe.